Hi, welcome to the Market Alert for Wednesday, the 10th of November 2020. So today is all about inflation, 1:30 p.m. Look at that in just a moment. Inflation expectations have become unanchored and American consumers aren't buying the transitory inflation narrative anymore. If you want to see the real figures, you want to go to Shadow Stats by John Williams. I'll just bring this down so you can see the URL there. Shadow Stats. Alternative data inflation charts is where it's at, and you can see here this is the so-called government's data, and here's the same figures produced by John Williams there, which you can see that inflation is running actually closer to towards 15%, which we know anyway. So and what John does is use the same figures that were in there from 1980s. There you go. It says they're based on the 1980 figures compared to the government that adjusts them all the time, take out different items. So if you want the real figures, and that sounds more like it, you know, weekly shop would indicate that we're in that sort of region for the cost of goods. So yeah, Shadow Stats for John Williams' data. Absolutely fantastic site if you are into the real figures and the real numbers and the real analysis of those numbers. So let's move on. Rabobank, we all know that if stocks slump, the Fed will boost QE to push them back up. Absolutely, that's what they've done since 2008. Take no notice of this crap about we're going to taper from mid-November. I'm still waiting for a date. Anybody found a date yet? Because I can't find one. Again, it's all rhetoric, isn't it? You know, it's just to make it look like they're actually going to be doing something, or sound like they're going to be doing something. But we'll see in a moment that the bond yields think differently, because stocks are what it cares about. FOMC members themselves play the markets and would lose out personally if they let asset prices crash. Not unless they were short, of course, with put options or the futures contracts. But yeah, I mean, most of them are long buyers of the market. And we saw Powell and one or two others who have been playing the game, as it were, before announcements, making sure they were positioned nicely, front running, as it's called. Bond yields are tumbling as policy error panic resumes. That's what I'm talking about. Driven the yield curve 2s and 30s to its flattest level since November 20. So you see the bond market's not buying it either. And the Bank of England were very sorry. Governor apologises to Brits crushing their standard of living. That's because of hyperinflation, believe it or not. The choice between heating your home and feeding your family is a real one for many Brits. Too right it is, but they don't give a monkey's toss about that, do they? Simple as that. As long as they're all right flying around in their private jets to Glasgow and quaffing champagne, it doesn't really matter. Anyway, let's get to the news for today. Let me just close this for a second. The main one, as I say, is 1:30, which is the CPI numbers. They're out, and then we've also got unemployment claims as well out for today as well, which normally Thursday, isn't it? But there you go. Or is that the weekly jobless claim? So this is another one which I don't recall seeing, but there you go. That's out at 1:30 as well. But the market's going to be looking for this, the CPI, the core CPI. And when you actually look at their figures, we look at the detail, you can see that back in July and June we had 0.6, and we had a spike in July to 0.9. So when it looks like 0.6 here, then it's not as bad as it looks. So the previous was 0.4. They're saying it's going to increase 0.2, but we'll see when that is released. It's going to impact the dollar and the metals when they do so. Gold is already down overnight, which is interesting. Silver's holding at the moment, which is why you're seeing the ratio there switching to red in favour of silver at the moment, who's currently holding. But don't hold your breath on that one, because yesterday afternoon they managed to do the grand slam, as it were. Start off by looking at the Dow, as we always do. Yesterday we got the all-time high from Monday. The market got nowhere near it yesterday. Saw selling coming into the market, or supply. That's what the purple bar is, but finding support overnight. According to the news, the reason for the market moving sharply lower from the open, as you see there, was in fact Tesla. So let me just show you what that was. Let me just grab it if I can find it. Yep, there we go. Let me just drag this in for you. There we go. Tesla plummets 150 billion in market cap gone in minutes. Did Elon start selling? There was a lot of news about this yesterday. Did Musk just start the market crash? Well, I very much doubt it. But apparently he needs to raise a few quid for personal debts. Must have a lavish lifestyle, I can tell you. You know, we're not talking a few quid here. But according to the news, that's why we saw the Dow moving sharply lower. And then it's moved down to yesterday's low on the overnight and bounced. Well, what a surprise, because in the bull market, as I've said a million times before, the low is very important to bring the market back from. In the German DAX, this one, nope, we'll get the right chart in a minute. So there we go. We can see that yesterday we made a new all-time high in the DAX. This was created in the mid-morning. So we've breached the other one. The new high is 16,107. As soon as the market got to this point in the afternoon, the Dow selling off with the Tesla as the excuse, the market reversed and came all the way back. However, it is now trading in a sideways range. As the market's made a new low overnight, I can't draw in the fibs from this high to this low because it's still in existence. So I'm just going to double click the whole range of this bar from the high, and now I can see where there could be some potential weakness as or resistance as markets moves higher back up to yesterday's high, should it do so. If it decides to move to the downside, we're quite a distance away because of the parabolic move that we've had recently, so 38 is going to be down here. So that's how I would set this up. That said, what you can do, you can use what I call a rolling fib, where you've got these higher lows and you can just mark up these as the market moves down to these levels. So from this low up to the high, you can see there now we're at a 62% retracement from this low to this high, and it works really well, this does. So you can roll down these levels until you get to a point where the market actually gets to 38 and see where that support is as well. So yesterday you can see that price is trading to 62% retracement drawn from the low of this bar. So like I say, we're just rolling down on these lows. They're still lows, they just don't stick out like this low here or this high. It's just like I say, consecutive highs and lows, and it works really, really well. In the 30-minute chart, you can see yesterday the market just moved all the way up until we got to lunchtime. Then we had a spike just before the Dow opened. The Dow then moved sharply lower because of the Tesla story, and you can see that the DAX has moved lower since, and we're down at the low also, where the market has found support and is starting to come back to the upside as well. A closer look at yesterday's activity, you can see that we kicked off straight away to the upside, back to the BRN, and then the market just drifted and then broke out to the upside once more. And the same in the pre-market of the Dow. You can see that it just flowed all the way up, and then as soon as the Dow opened, the DAX sold off sharply back to the DP area there. We did have a short that failed, but that's because the market bought in at the DP level, and then this is followed by a buy as the market moved back. And then overnight, so you can see it's just drifted, moved lower, and has now moved back above the low. And you can see the market coming off the low and small buying down at these levels. You can see the green bars there, where the market has been supported. In the silver market, you can see that yesterday the market was slammed to the downside but came off this. It's also moving up overnight at the moment in anticipation that the inflation rate is going to be high. If it comes out higher, You're definitely going to get a shakeout like you got yesterday. Let me just find it for you. There, that's what they did yesterday with Tesla. They sent the market down about 35 cents, and then the market was brought back. Now, if the inflation rate comes out higher than the 0.6 it's forecast today, then you can expect again the slam, because the dollar will move higher. And if we have a look inside the dollar, you'll see exactly this is what happened yesterday. Tesla sells off, the stock market goes down, and there is a markup in the US dollar, and then eventually it comes back. The dollar is starting to look weak, and as I've said, one economic news item doesn't change a trend of a market. And at the moment you can see that this is being moved back already, maybe in anticipation that prices will, or the inflation rate will come out a lot higher, and then it'll only be a temporary move to the upside for the dollar. Watch the 89% retracement if it does. And in the silver market, watch for a slam back down to the low of yesterday. Meanwhile, gold already down on the overnight. Maybe they're marking it down to buy it back cheaper when the news comes out. But an interesting picture there. Unlike silver, it's usually the other way around, isn't it? That silver is being slammed and gold is going up. But obviously the major hedge against inflation is gold and not silver. So there we go. It's a matter of let's see what happens today with regards to this news at 1:30. All eyes will be on the number and the brace position assumed in readiness for the release of the CPI number. Okay, that's it for this one. As ever, thanks for watching. See you in the next.